All right, let's do this. This is your market update. This is the pre-market for Thursday, March 19th, 2020. First thing we're going to take a look at is gold here. It's trending down, and I think one of the interesting things about gold is it's actually been fairly consistently trending down. Here's a 30-minute chart. It's been following this channel pretty closely. Um, I'm expecting another down day. I'm expecting 450 today, or I'm sorry, 1450 today. Um, and given all the stuff, the turmoil that's going on, and the volatility that's going on, pretty much anything could happen. At one point, all of this helicopter money is going to register, and the price of metal is going to turn around. Here's the daily on the gold. Let's take a quick peek at silver. Uh, it is actually showing a little bit of an update, but look at this, massive drop. Again, silver, I still think this is not reflective of the physical price. If you go to purchase physical silver right now, it's going to be a little tough, and your premiums are going to be pretty high. So you're not getting it this cheap just because you see it on here. So don't be surprised if you go to actually buy some silver coins that you don't get them for anywhere near this price. All right, so let's take a look at the gold-silver ratio real quick. That's back up to 123. Coming, came down a little bit, hit 121.68, headed back up. We'll see what happens here. I'm actually expecting this thing to possibly top off a little bit. Maybe, because I think silver has been beaten down so hard and so fast that it may actually hover around $12 while gold goes down and touches, 5% from here down, possibly. Again, I'm not I'm not making any trading advice, just letting you know what I think here. Let's take a look at the markets here. The Dow is down. I was reading that I think it limited down again today at some point, probably when it touched down here. It limited down. Yesterday when I did the video in the morning, I was saying that you could see 18.5. We saw 18.883. Again, this is mass liquidation. People are selling. There's a lot of margin calls. What happens is if you don't understand what a margin call is, I'll give it to you real quick. Basically, what we're saying here is, and just to use round numbers so you can understand them, if someone has $5,000, they can buy $100,000 worth of stock with that $5,000. That's buying on in margin, right? You're borrowing the other $95,000. But what happens is if that stock loses value to where your $5,000 portion of this trade evaporates, the bank says, wait a minute, your money's gone. Now you're losing our money, sell it, and it gets sold. That's a margin call. Okay, just a little tidbit. Now I'll try to throw in little stuff like this. This is a channel. I'm trying to put out a channel for the layman here, just to try to get a grip on what's going on. All this turmoil. I can only suspect people are coming, to YouTube, try to figure some of this stuff out, and we can help inch you along and get you a little bit familiar with some of the terms that you're hearing and some of the things that you're hearing. Try to understand those. Real quick here, what I want, I'm happy about the way I have to do this. Okay, let's take a real quick look at the US dollar index. And what I did is I pulled up a monthly chart of this. And I mean, as you can see, I mean, we are hitting some all-time highs here. What's going on here is this is a foreign entities that borrowed in US dollars are having to buy US dollars to make their to service those loans, and it's driving the US dollar up. As you can see, there's been a couple times in history. If you take a look at over here, it's 2000 and during 2001, it really got high. This is when all those euro currencies were beaten up and battered pretty good. And most of the time, the Asian currencies have always been beaten up compared to the Western currencies. This is part of the manipulation everybody screams about. And there is some of that to a degree. But nevertheless, you can see the strong push in the U.S. dollar. At that, I mean, people are trying to predict the top. I would not try to predict a top to this, just like I would not try to predict a top to the gold and silver ratio right now. This could literally go to 115. Absolutely, it could go to 115. The gold-silver ratio could go to 140, 150. Who knows? But let's take a look at the markets here. We've got the Dow's down 3%, S&P 2.4, Nasdaq's down, Bitcoin's up a little bit. The German DAX is down. The Japanese Nikkei is up a tiny bit, almost a point. The Shanghai Composite is down 1%. The UK is down 1.5 over. Hong Kong 2.5. And now we see the other stuff. Now let's take a quick peek at oil. Still, oil hit the $19 handle yesterday. This is insane. This is just absolutely crazy. You've got Saudi prince flooding the market. You've got Russia saying they're not going to slow down production, and then you've got the decrease in demand because of all the people not traveling and no flights and economic activity grinding to a halt. So this is this isn't that surprising, but it's still pretty remarkable to see. So let's take a look. Let's take a look at the rates here. The 10-year is sitting at 1.12. You're down 0.065 from yesterday. I was showing this. This is going really slow. I apologize. My computer's doesn't like this screen capture program, I think. So I'm gonna put this on the 5-day. As you can see, we're trending upwards a little bit. We're coming back down off of some highs yesterday, but the Treasury is starting to come up. This. It's kind of hard to say what you want to see here. Be careful what you wish for. These treasuries start going up. This is a huge problem now. Like I've told you before, the U.S. has a lot of debt, and a lot of it's short-term paper. So basically what we're talking about are these, all of this short-term paper right here that gets refinanced. I mean, you're talking, I believe it's somewhere in the neighborhood of $8 trillion that has to get refinanced every 6 months right now, being rolled over in 6 months, or let's say call it 1 year and less term paper, right? That's, this stuff starts going up, and all of a sudden the servicing of the U.S. debt goes from, $300 billion a year or $600 billion a year to $1 trillion a year. And we're already running, $1 trillion deficit, $2 trillion with well, let's go into that. All of the news that you're seeing here. This is where I was saying the Dow limits limited down. Again, everywhere you read, it's just bailouts, money printing. These are debts, helicopter money on the way. This is what you're going to start seeing. I would not be surprised, if the U.S. were to run a well north of $2 trillion deficit this year, well north of that. I would not be surprised at all if it was actually closer to $3 trillion. They're just going to start sending people checks, which actually I'm more in favor of than bailing out all these companies who used all the opportunity the past 10 years to buy their own stock and increase the money of that, or increase the value of that stock. I think that was a little bit, I don't think that should have been allowed to go on. Much of the equities increases over the past 5-10 years, a big chunk of that has been companies buying their own stock back with low interest loans. And so that's kind of what helped really set this system up for the deleveraging that you're seeing right now. But at any rate, let's keep an eye on all this stuff. I'm trying to grow this channel, so please share, like, subscribe, all those things. Comments. I'd like to keep this going. Help you guys, help the layman out with the understanding things. No question is too silly. Ask me. I love answering it. If I don't know, I will certainly find out for you or put you in the right direction. So be safe out there, and take care of each other.